Hello, hello. So today I'll be going to analyze the fix 75. Fix 75. We are going to use uh, ICT concept to trade fix 75. So first of all, we're going to H4 time frame. H4 time frame. Let's see what's the overall market direction H4 time frame. H4 time frame. Yeah. So you can see we have this low. We have this low and this high, right? From here, that was an uptrend. All of this was an uptrend, a clear uptrend. Now, price is making lower high, lower low, lower highs, lower low, which indicate that we are in a downtrend from here to here. Okay, so we are going to find fair value gaps on H1, M30, and M15. Our entry time frame is going to be M5 and below. M5, M1, M2, M3. So let's go to M1 time frame. Let's see what is happening on H1 time frame. Let me remove this. So as of today, we're going to see setups for today, or a setup that occurred today, that played out today. From here, you can see this one fair value gap here. This is fair value gap. It looks small, but it's a nice fair value gap on higher time frame. This one, right? As you can see, market was going lower low, lower high, lower low, then try to then break this lower high, push to the downside. Now push up and take out this high. This is called liquidity. This is a liquidity level. Tell liquidity level. Liquidity level. Right? This high. It's a liquidity level. So many stop loss there. Pending orders were resting there. Let's trade this one. This one, right? So this H1, we identify fair value gap and liquidity level, right? Now let's get to lower time frame like M5. Let's see what is happening here. Fair value gap M5. Okay, guys, what we are looking for on lower time frame, we are looking for a pattern like this. We want to see something like this: a push, then a retracement, push prices to break this high, push high, then into a fair value gap. Then we want to see a market structure shift to the downside, like a strong push. They call it displacement. Strong push to the downside. Then we wait for pullback, retracement, pullback. It could be pullback into any fair value cap here or a breaker, any around this area. Pullback into this area, right? After pullback, then we take our entry there. We take our entry there. We say it from here. Our stop loss has to be above this high. And first target is going to be here, right? So this one is this is our this is going to be our stop loss level. Stop loss level, also called displacement high. Displacement high, right? That's where you're going to put your stop loss here, here, above displacement high. This is our displacement low. Displacement low. Displacement low. You want to see price to break this low. Aggressive. Aggressive, like a big candlestick. We don't want to see small candlestick coming into this area. We want to see big candlestick break this low, right? And the retracement into N. It could be fair value gap, it could be breakup, it could be supply zone around this area, right? Around this area. Now, how to enter this market? It's either you put a limit order here, or if you want to wait a little bit more, you you wait for a candlestick rejection in this line, or a candlestick pattern. Could be engulfing candlestick, it could be pin bar, it could be any candlestick pattern here. Then you took a trade. Stop loss were the same, above displacement high, right? So let's go back to this chart and see what is happening here. Let's go to M1. You might see something clear. We are now on M1 time frame, right? M1 time frame. This is our fair value gap, higher time frame, higher time frame, fair value gap, fair value gap, right? So H1 fair value. We are now in M1 tab for entry. We're now looking for confirmation. As I said before in this diagram, this diagram, this diagram, right? Now let's see what is happening here. So we have this push retracement, and a push into a fair value gap, higher time frame fair value gap. After this, we have a nice push, like this is what we call displacement. This push is a displacement. This whole move, it's a strong move to the downside, which break this low, right? As you can see, we break this low. That's the most important thing. We want to see displacement here. We don't want to see candlestick like this. Let's say you are saying you are here, you are waiting for something like this, something like this. Let me remove this one. Show you something. Show you something. You are waiting here, then you say, okay, this is it. Come on. Let's say we are here, right? This is a push. Yeah, it's correct. Push, retracement. Then push. Yes, we break this high. Yes, we go into a higher time frame, take value gap. Then what happened after that? We push the downside. Did we displace this low? Did we break this low aggressive? No, no. Some they said, okay, there's a weak to the downside. No, no, no. This strategy, you're going to see a strong push to the downside, like a strong push to the downside. Not like breaking with the wicks. No, no, no. We have to see a strong push to the downside. So in this case, there's no entry here. There's no entry here. There's no pattern here which I can trade here. The only pattern is this one, big one. This one. Higher high, higher low, higher high, higher low, which break this low. Then what are we going to see next? Okay, as I said before, we want to see pullback. Pullback where into either it could be fair value gap in and around this area. Fair value gap between displacement high and displacement low. Right? It could be breaker between displacement high and displacement low. Any key level between these two areas, these two key levels, so between displacement high and displacement low. So what do we have here? In this case, we have let me delete this thing so that It's too messy and it. Too messy. It's not clear. Let's delete this one. In this case, what do we have? This is a breaker. This is our last. This one. It's a breaker. If you know breaker, this is a breaker. This one is a breaker. Last push up before. Sorry. This one. This one. These two red candlesticks. Not green one. These two red candlesticks. It's a breaker. Right? Let's go to M5. See what we have on M5. Remember what I said. Our entry is on M5 and below. Right? What do we have on M5? Now you can see a clear reference here on M5. This whole candlestick. So we wait for price to come back. Either you can put a limit order here, sell limit here in this zone. Stop loss above displacement high. Right? Now target. Where are we targeting right now? First target. This one is we are targeting this low. First target. Our first target. Right? First target. Where is our second target? This low. This will be our second target. This will be our second target. Yeah? That will be our second target. Let me trace this. This drawings. No longer want them. This will be our second target. Let's say you don't want to put limit order. You don't want to put limit order here. You can wait for try this one. You can wait for candlestick rejection, candlestick pattern. So in this case, we have a rejection candlestick followed by engulfing. So you could take your entry here. If you take your entry here, waiting for you wait for candlestick pattern, you now have a confirmation that this key level is holding price. this breaker. It's holding. But so there's no need to put your stop loss all the way above displacement high. You can put it above this zone since it is confirmed already. Right? It's confirmed. Target is going to be the same. This low and another one down. Right? So yeah. So right now it's a trade that is playing out. It's already in profit. Setup already played out. If you took it, you could have been. So yeah, that's it for fix 75. Let's look for another example. Look for another example. I'll go to H1 time frame. H1 time frame. I want to look for trade setup around this area. Do not go back like 2, 3 weeks ago. No, no. Okay. Now, this is a fair value gap. Let's say you want to trade without looking what's the market direction, like what's the trend, where is this. This is a fair value gap from this candlestick up to this. So a nice fair value gap on higher time frame. This is H1, right? After identify fair value gap on H1, let me type that. Fair higher time frame, fair value gap, right? Fair value gap. We go to lower time frame, M5. Let's see what is happening on M5. If we can get an entry here, let's see if we can get an entry here. Using our previous pattern, like as I said, when you see price lower low, lower high, lower low, and breaking this previous lower high, coming back into any fair value gap, supply demand, then continuation. What is happening here? Okay, what is happening here? Price move lower, low, lower high, lower low. Then what do we have after this? we have this move up, down, up, down, up, down, up, down, up, down, then up. Here's the question, right? Here's the question. This is our level that we'll be watching. This previous high. We'll be watching. How are we going to break this level? Now you have to ask yourself, did we break this high with momentum, like market structure shift with displacement? In this case, no. There's no displacement here. Just up and down candles. All these candles. There's nothing here. Nothing. So there's no entry pattern here. There's no entry pattern. There's no entry pattern. There's no entry pattern. So yeah, that's it for today, guys. For those who are caught this move so easy. Your trade is running in profit right now. Limit order, stop loss above displacement high. Target this low. First target, second target. That's it, guys. So okay, see you next video.